You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. It's 6/8/21. Well, Michael Pinto, our good friend, is back with us. And Michael, it's always great to have you on. So the market, what exactly is going on here with these markets, Michael?
Gee, that's a general question, but I can spend 10 hours answering that one. I think we're getting ready for what I call the fiscal and monetary cliffs, plural, coming up. So while everybody's positioned for intractable inflation and inflation to not be transitory, I find myself on an island here because I actually know what causes inflation. And remember, since the financial crisis ended in 2008, the Fed was trying to create inflation over and over again. Well, they created inflation in the stock market and in the real estate market for sure, a runaway inflation. And we have intractable inflation now, by the way. And the reason why we have it now is because the Fed did a couple of things unique this time around after the Wuhan virus broke out. Well, number one, they printed $4 trillion in a very, very short period of time. So you remember back in December 2007, the Fed's balance sheet was 700 or 800 billion with a B dollars. Now we're very close to $8 trillion in its balance sheet. So we have a lot of monetary inflation. The base money supply has exploded. But this particular time, we actually sent money through, helicopter carpet bombs, $1,400 checks to every man, woman, and child several times, enhanced unemployment. Well, we have inflation now. We have home prices up 21% year over year. We have commodity prices up over 60% year over year. And the question is, what happens now? Well, the helicopter carpet bombs have stopped. Enhanced unemployment ends September 4th. There's mortgage and rent forbearance, which ends this fall. Student loan forgiveness ends in October. So you have a lot of things happening right now. Whereas before, we just sent money, checks in the mail, told people they didn't have to pay their mortgage or the rent, gave them more money to stay home and not produce, which created all these bottlenecks and supply shortages, paid them more to stay home and not work, Kerry, which is why we have all these job openings and nobody wants to go to flip hamburgers when they can sit at home, COVID free, and collect more. But that ends. It's all ending. And then you have, that's the fiscal cliff, Kerry. Then you have the monetary cliff, which has already begun, even before the Fed announces the initial tapering, which I think is going to happen in Jackson Hole in August. The tapering of $120 billion a month will slowly go down to zero. It's 80 billion treasuries a month, 40 billion mortgage-backed securities, as if the real estate market actually needed our help any longer. So that'll start probably later this year. They'll announce it in August and probably start in October. That's my best guess. But the Fed has already greatly attenuated its pace of purchases. They're only down to 1.44 trillion this year. The prior year was over $3 trillion. So fiscal cliff 2022, monetary cliff 2022, and let's see just how healthy the consumer is when he stops receiving checks and has to pay his mortgage. Let's just see how the U.S. economy can stand and how the stock market can stand on its own without $120 billion a month of counterfeiting thrown at the canyons of Wall Street.
Hey, and you know what, Michael, in addition to the governmental forbearance, private industry, the banking branch, auto finance, they all allowed people to forbear or defer their payments as well. I don't know if their programs are still ongoing or not, but this was like at every level of society. And one thing we didn't even talk about, Michael, is the fact that all of these commercial entities, commercial real estate entities and malls have all been basically zombified. None of them have been making their mortgage payments, or very few. What about hotels, like hotels in Manhattan, all securitized up the wazoo? None of them have been making any mortgage payments. So it's kind of like that Twilight Zone where the guy could just point at everybody and point his finger and they would all stop moving and they'd be frozen in time suspended animation. And then he'd snap his fingers and they'd all come back to life. Well, all of a sudden the Fed's going to snap its fingers and they're all going to come back to life.
Yeah.
And then we're going to have the zombie apocalypse here.
Well, CNBS will always have a talking head or two on. Some of them are, their moderators will say, don't bet against the American consumer. Well, yeah, don't bet against the American consumer if he doesn't have to pay his rent or mortgage and you hand him thousands and thousands of dollars per person to go out and buy whatever they want, electronic products from Apple, computers, whatever they, this is the thing. People are betting on this reopening trade. Okay, I did too. I mean, we did very well last year at Penton Portfolio Strategies, betting on the reopening of the economy. But the reopening of the economy, okay, yes, people will be able to now go out to dinner and go on vacation. So leisure and hospitality sector will boom. But that's going to come from something because, again, people did have a lot of buying power. We gave people more money last year to spend than if they were already employed. All 10 million people, they got laid off. And in the meantime, we also gave people a massive increase in their bottom line by boosting the values of their stock portfolios and their real estate value. That is all going to come to an end in 2022. So, listen, I'm a gold bug. I think the long-term value of the US dollar is toast. I'm an inflationista, all that. But what you have to understand is that the way this economy has been built, the whole developed world economies, by the way, it's not just the United States. We are going to have a series of massive inflationary booms followed by devastating deflationary depressions. That is the construct that has been erected by central banks. And from that, there is no escape, by the way. There is no innocuous, slowly, they're slowly taking away the punch bowl. They tried to slowly take away the punch bowl in the year 2000. It ended in disaster. The NASDAQ lost 83% in 2 years. They slowly took away the punch bowl. Interest rates went to 1% following that crisis. For 1 year, 1% for 1 year, 2003 to 2002 to 2003. Then they slowly raised interest rates to 5.25%. What used to be 6.5% on the Fed funds rate, then it was 5.25%. Then the housing market cratered. Then we kept interest rates at 0% for 7 years, virtually less than 1% for 7 years. And we slowly raised interest rates. Guess what happened? We got to 2.5%, Kerry. And the credit markets froze and the stock market went into free fall before COVID broke out, before COVID-19 broke out. So here's the question. Let's just say in 2022, I'm right. Maybe it's 23, but I think it's 22. Next year, coming fast. What is the Fed going to do? See, the Fed can always ameliorate a problem caused by deflation. But if they're still already at zero, which there most certainly will be in 22, and they might even be some capacity of money printing, QE, at the time that this debacle happens. What are they going to do? Are they going to be able to, someday, they're going to run into this problem. They're going to have to mollify a market that's panicked by inflation, stagflation to be specific, by creating more inflation. And that's when it's game over. But until then, we're going to have these rolling series of deflations and intractable inflations and deflations and depressions. And you better have an active management strategy because you don't want to be long bond. You should not have been long duration bonds in 20 or even this first part of 21, but you better be long them in 22. So with what asset classes you want to own, what sectors, what style factors, that's how you can stay ahead of this very dangerous game.
And dangerous it is. I mean, you always get the example of the drug addict, to get them off the heroin, they give them more heroin, or they substitute one drug for another. and hope that somehow the addict will learn how to function. But this is going to be a conflagration, and it's going to affect every country in the world, even Russia, which is trying to de-dollarize. How do you stop it? Because all the countries that are your markets are dollarized, so you can't insulate yourself. No country is going to be exempt from this.
Well, for Russia, Russia relies on oil. So, what do you think the demand for oil is going to be in a depression? Let's say in a 2008, 2009 scenario. Well, do you think Russia's going to be? You don't think China or Russia? I mean, come on, there is no escape. They'll be hurt the worst, by the way, because they have higher volatility regimes.
Yeah, there's no.
And then they have. I'm sorry, but it's one thing they have, and then they have all this dollar-denominated debt out there that they have to pay back in a currency that will be losing value because of the reversal of that dollar carry trade, which always happens in a crisis.
Always. And we saw that happen in 08 and 09. Like all those people who borrowed money in Eastern Europe from Swiss banks, and they were Swiss franc denominated loans for car loans, everything else. And, then they wind up having to pay it back in Swiss francs, which have appreciated wildly from where they were. And it's like, at what point do you just walk away and just say, I'm done? And I think a lot of people will be doing that. But let's go back to real estate, because real estate's on fire here, especially in Florida, probably more than any other state in the country. Because I always say that Florida only has one industry, and that's real estate. All other industries are basically branches of real estate, whether it's theme parks or hospitals or schools. It's all part of the real estate market. So, and people are still going to come here, presumably, because what happens during economic crises, we get draconian measures instituted by the ruling regime to try to keep order, just like we did during COVID, right? So people move here for freedom, presumably. What's going to happen to real estate? It's going to blow up in a lot of markets, though, isn't it?
Don't just survive, thrive. The Financial Survival Network.
Arcana Corporation is on the verge of bringing the world's highest grade silver mine into production. The Revenue Virginius mine in Colorado has proven improbable silver reserves grading nearly 37 ounces per ton silver, with an all-in sustaining production cost of only US $8 per ounce of silver. The mine is fully permitted with infrastructure already in place, and the company has announced they plan to commence production in 2020. Achieving successful production usually results in a significant upward share price re-rating on the Lassonde curve. Arcana trades under the ticker AUN in Toronto and AUNFF in New York. To learn more, go to arcana.com. That's AURCANA.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, anecdotally speaking, I tell you that I'm looking for property in Naples, Florida. And my real estate agent said, "Hey, listen, if you're not gonna just hit the offer, or just say, okay, what's the asking price? I'll do it, and do it within 24 hours. Don't even bother." And cash. Because there's cash too. You have to have cash. You can't be a contingent. Oh, I might sell my house here. No, don't bother. That's not going to work. It has to be a cash offer. And there's no inventory. So there are entire communities, 600 home communities in Florida. Well, what do you got for sale? Nothing. We usually have about 10%, about 60, in this particular community. Whale West is a community in Naples, specific. So we usually have about 60 houses for sale. How many do you have? Zero. Right. And then in the meantime, the Central Bank of the United States says, we're going to continue to buy $40 billion a month of mortgage-backed securities to blow up this real estate bubble even higher. Make sure that if you were a renter trying to get a first-time home in Naples, Florida, or in many other communities around the country, forget it. You're not going to be able to do it. And then they're going to say, okay, we've taken home prices back. If you look at home price to income ratios, they're back to where they were at the peak apogee of 2005, of the apogee of 2000, the highest point of 2005. And then they're going to say, but we have a wealth gap here that we have to keep we have to fight by continuing to do this.
Well, I'll tell you a little anecdote here. I'm in Palm Beach County, Florida. I bought a home, just recently closed on it a couple weeks ago. I got it. I felt really proud of myself. I got it for the asking price because the people wanted a long closing. They didn't care so much about the money, but they were looking for another place in the area, a larger place, I might add. And they just wanted to be able to keep their stuff there. So I said, hey, we could go to August as far as I'm concerned. And so I got it, and they cared about their neighbors. They wanted a good neighbor for their neighbors. Like, I could care less, but hey, I play along. And from the time I signed the contract to the time I closed, the thing went up probably 12 to 15%.
Wow.
All right. Just while I'm waiting, there's like nothing on the market. Well, prices go much higher. That's the problem. People who might want to cash in on their property, because I'm thinking, hey, maybe I'll just flip it. I'll never live there. And then I'm saying, yeah, well, then I got to pay taxes. And then I still got to find a place to live.
Yeah.
And they want to jack up the rent where I am now by 12%. So it's actually cheaper for me to live in a home that I own, especially with the limited tax benefits we still have, than it is to actually go rent. So what's the point of that? It's just an anecdote of how heated it is.
And then people will say, well, why don't they just have the home builders just erect more homes? And then he's, okay, well, they're doing that, but the cost of materials has skyrocketed to the point where if you want a new home, again, because I'm looking at Naples, that's what I can speak of, it's $800 a square foot.
Madness, man.
To buy a new home in Naples, Florida.
Yep.
So, I mean, who could have $800 a square foot?
Yep. Oh, for sure. For sure.
Oh, well, yeah.
Yeah, it's just madness. And I've seen it. And, you know, that's interesting thing. My friend Jason Hartman's always had the theory that when you buy a home, you may not know it, whether you know it or not, you're buying a bunch of commodities. You're buying wood, you're buying copper, you're buying aggregate, concrete, you're buying fixtures. It's all a bunch of commodities, copper, like I said, and who knows what else. So when you see all the price of those commodities shoot up, so we're going to see more inflation here to a point, and then it's going to just crash to deflation.
Yes, I think it's going to go. Well, no. So you're at the you're at peak growth and peak inflation right now, just based on just predicated on the base effects that you see, year over year base effects. You're seeing the peak inflation right now, and then you had that fiscal and monetary cliff, which is coming. It's happening now. You'll see disinflation, just the second derivative, the rate of change. So instead of having inflation growing at 4% year over year, you'll probably go to 3 and 2, back to normal rate 1 and 1.5 sometime in 2022. And then here's the problem. Here's what I see. I can't tell you. I'm not one of these people who tell you, well, I could tell you that May of 2022 you're going to see a debacle. Nobody knows when, but I have a model that tells me when it's going to happen. But I can't predict, a year out when it's going to happen. But I think the odds are of a complete credit crisis happening, a shutdown of the repo market in 2022. We talk about this all the time. 20% of the largest companies in the United States are zombies. 1 out of every 5 has to float debt just to pay interest on existing debt. If you look at, let's say, CCC bonds, the junk bonds, the junkiest of junk, okay? Corporate debt, 1 notch above default. The yield now, Kerry, is 7% on a bond that's very likely to be in default. That's 100 basis points, 1% above where treasuries normally yield, a 10-year treasury note.
Crazy. That's
not junk, CCC junk, Kerry.
That's the junkiest of the junk.
Junkiest junk, as you know. So what happens? Here's what goes through my mind. The Fed says they have the tools. Don't worry if inflation gets out of hand. We're going to sit on our hands. The FOMC says we're going to sit our hands because 2% inflation isn't enough. We want 2.5 on the core PCE. Is already way above that. On the CPI inflation year over year is already in the 4s. But as I mentioned, the real world inflation's in the 20s. If you look at, what's more important than your home price? 21% year over year. Commodities, what we eat. Go look at some beef. Cost of beef, corn. Well, 60%, Kerry. So we're way in. I'm not someone who's a deflationist. No, we have inflation. We have been tracking inflation. We haven't tracked inflation right now. But the Fed says we have the tools to fight inflation. Well, of course they do. But go ahead and use them. I want to see in 2022, when we're on the precipice of the deflationary depression, I want to see the Fed say we are now going to hike interest rates, a la Paul Volcker, and we're going to take the Fed funds rate from 0 to even if it's just back to normal. A normal Fed funds rate, by the way, is 5.5%. Let's just see them try to go there when 2.5% in 2018 brought down the entire stock market. In 3 weeks, the Russell 2000 lost 30% in 3 weeks. Let's see them actually fight inflation. Let's see how the real estate market does. Let's see how the repo market does. Let's see how junk bonds do. Let's see how zombie corporations do. Let's see how the stock market fares if the Fed does that. My assistant, her son, I won't name any names, but her son is one of the Reddit people. He trades off the Reddit crowd where you have a healthcare provider going up 100% in one day. What's the stock? What does the stock do? I don't know. I know the Reddit people are buying it. So
why should it work?
This is a symbol of this reminds me of a lot of 1999, but it's much worse because in 1999 we had a NASDAQ bubble. We had a bubble in the stock market, but it was sequestered and mostly contained in NASDAQ stocks. That did not stop the S&P 500 from dropping 50% though, but it was sequestered there. Now we have a triumvirate of the bubble. We have the entire equity market in a bubble. We have a echo bubble in real estate, and we have this unprecedented bond bubble. It extends from sovereign debt all the way down to CCC junk.
Hey, well, there's no rest for the weary here, Michael. So really what you need to do is go over to pentoport.com. That's Pento Portfolio Strategies. Contact Michael, find out what to do here, because the handwriting is clearly on the wall. And if you're not ready for it, that doesn't matter, because it's going to be for you. And hey, Michael, it's always great to have you on. If you have any questions for Michael, please send an email to kl@kerrylutz.com. We'll share it with him. And make sure you sign up for a free newsletter, financialsurvivalnetwork.com. Michael, always a pleasure. It's definitely going to get interesting real fast here.
It already is, and it's going to get a whole heck of a lot more. Thanks for having me, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.